Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate Balloon. We've got longtime fools Dan Caplinger and Jason Hall giving a 1 to 10 rating to the Nat Gas Moneyball wreck that started life in 1884 as the Equitable Gas Company. It's EQT Corporation, ticker symbol EQT. I like the old name better. I'm stumbling over the acronym. We'll talk about the strength of EQT's business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Both of you have 7s, Jason.
Yeah, I don't own any pure play natural gas businesses. If I did, there would only be one on the list for me, and it's EQT. It's absolutely the best in the business, but I have to crib Peter Lynch here. A great business and a mediocre industry is a mediocre business, and I'm just afraid eventually that's going to happen. It's just a tough place to make a living. But EQT does it better than anybody.
Yeah, I do own shares of EQT, and I agree with Jason 100%. It's 7 because they're the best possible business in a difficult industry. Natural gas prices have been in a basement for a long, long time, and that's really hurt EQT's overall profitability.
We're giving a natural gas 10 out of 10 is what I'm hearing.
Oh, yeah. If we were grading on a curve here, it'd be different. Exactly.
Yeah. For management, a 10 is Warren Buffett. A 1 is Homer Simpson. These scores are even higher. Both of you have 9s, Jason.
Yeah, you can't punish one of the great CEOs of our time, and that's not hyperbole, for being in a tough industry. The returns investors have earned are directly due to Toby Rice and really what the Rice family built before that kind of turned into EQT. And I think the move to reintegrate the production assets with a midstream business, I think that's going to be probably the real value creator over the long term, and the stability factor that does help this business continue to generate good cash flows, even when prices aren't necessarily great.
Fools, go back and take a look at what Toby Rice did in the aftermath of the Rice Energy EQT merger. It's a real inspiration to anybody who believes shareholders should have the ability to fight what they see as bad corporate governance. Probably the only mistake that Rice made was putting himself in a position where he had to do the proxy fight at all just to get control. He probably should have had control of the combined entity from the first, but better late than never, and EQT is where it needs to be now.
Right, for financials, a 10 is a fortress, a 1 is yikes. Both of you have 6s, Jason.
Yeah, again, I said if we were grading on a curve, would be higher because of the needs of the industry, but we have to be realistic. It does have a lot of debt. The debt ratios aren't great. I'll talk about that later. But I think it's serviceable because, again, the integration of kind of a more vertically integrated business should allow for steady cash flows, and that should help support probably the weakness of the business, which is in the debt leverage.
It's the same thought process for me and my 6. It's a comfortably profitable business, even with natural gas prices as low as they are. But there are substantial amounts of debt. I do agree that it's serviceable. But boy, I mean, we have all these tailwinds out here. We're talking about, energy production going through the roof in order to serve AI needs. These should be big demand tailwinds, and yet we're not seeing that move in natural gas. And so that's why I can't give it a higher financial score than the 6.
Okay, let's see what you say on valuation, Dan. How well will EQT stock do over the next 5 years, and how safe is it? 10's a sure thing. 1 is a lottery ticket.
On it, I'm giving EQT my usual 5 to 10%. That's a market perform. I think it's probably going to be at the higher end of that range because I think that the odds, there's a couple scenarios here. One is that we could see a big spike in natural gas prices if that AI-prompted demand ends up pushing through and increasing demand for natural gas for electricity generation. If that happens, I think the returns could be a lot higher. But if it doesn't happen, I think that the returns could be lower than 5 to 10%. I think the odds of the big spike slightly outweigh, and that's why I'm at the higher end of the 5 to 10%. I also think, I give it a safety score of 8 because the stock has held up really well even with natural gas prices low, even with the industry environment not kind of playing to its strengths. And so I think that if it has managed to survive this environment, there's a margin of safety in there that I think is incorporated in the stock price.
Yeah, I think if you're looking at a 10-year hold, it's a little easier for me to see this as being maybe a safer stock. My safety score is a 5, just because really I think the price of the stock and the performance is going to be where we are with the natural gas cycle in 5 years. That could mean great returns. It could also mean the stock is in the dumps. We just don't know what's going to happen there. I think investors have to be very cognizant of that. Again, this is the best of breed, the one to own. But my safety score is 5 because I think one of the things that's happened is EQT has accumulated these assets and become more integrated. That should help with cash flows, but we still have a debt ratio that is 2.1 times debt to EBITDA. That's very much on the higher end. It's going to have to keep servicing that, maybe even adding to debt over time. The stock dilution is another thing. The share count's up 70% since 2022. Now, a lot of that, again, of course, is acquiring those assets and integrating them. But if management starts to get greedy and maybe thinks they're better than they are about finding great acquisitions, the wheels could potentially come off a little bit. I don't think that's going to happen, but that's why my safety score is a 5.
Thank you to both Jason and to Dan. They've given EQT an all right overall score of 6.7 out of 10, despite tons of respect for management. Management couldn't beat a tough industry and a leveraged balance sheet. When I asked him about top it, Dan doesn't have any toppers. Jason, if you include the overall oil and gas space, he'd prefer Phillips 66, ticker symbol PSX. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Cisco, the food company, not the tech company or R&B singer. Till then, fool on.